Hi everyone, just bear with us while we get everything set up. Trying to live stream on multiple platforms, so this should be good.
It causes a few technical difficulties.
Right. What we might do is just go live, and then we'll do that another time. That should look like that. Right. Cool. Just get into the picture of all of them. Great. Well, we've got Instagram over there. We've got YouTube and Facebook. So sorry we haven't been able to do the scheduled one on Facebook, but we should be on the scheduled live on YouTube. So this is the first one of these that we're doing. So you'll have to excuse the fact we'll be looking at multiple cameras at different times. We're also recording it for our podcast as well. So any of the information we cover as well will be published on that over the coming weeks. So the main reason for this is to do a bit of a market overview, a bit of a market update on the Nottingham market, and then we'll go into a Q&A session where we'll cover questions that we've had in advance and also some that we'll get through on the live feed as we go along. So it's really an opportunity with the uncertainty in the market at the moment, and we're seeing that a lot with people that are out on the market, either buying, selling, renting. There's a lot of uncertainty. They don't really understand all their options. There's a lot of things that have happened, particularly in Nottingham with selective licensing, and now with Brexit looming as well. So we'll try and cover as many of these subjects and how they're impacting the market and yourselves and what you're planning. And then any questions you want to ask, please ask. So I'll hand over, firstly, David, and this is Paul. And I'll just hand over to Paul now to give you a bit of an overview of the market.
So yeah, just wanted to really touch on what the sort of sales market's been doing in Nottingham, really in sort of probably the last year or so. So what we have sort of seen is the current average price of a home is £177,118, which equates to roughly £186 per square foot. Prices have increased in the last 12 months by about 2.9%, which is fairly sort of steady throughout the UK. But what we've seen in Nottingham really is in the last 5 years, there's been a lot more growth. It's actually coming in at about 29.3%. So Nottingham is one of the better places to be buying in the UK. We're finally sort of seeing some growth and some movement over the last few years where it has stagnated a bit previously. So it definitely seems like it's a good time to be sort of buying at the minute, with prices sort of on the up a little bit, but also not a bad time to be selling as well.
Yeah, so obviously we've had that growth on the sales side, a lot of people buying and selling, and we've had quite an increase on the rental side as well. So the average rent now is around £122 a month for houses, and on the apartment side it's sitting around the £630 odd a month. Obviously depending on size and location, things like that, it varies. But rental values have still increased 6.2% over the last 12 months. So as a buy-to-let city, it's become extremely popular. You might have recently seen the media coverage saying we're in the top 5 cities in the UK for yields and returns and growth. So it really is a good city from an investment perspective, with the universities and everything that attracts people here. It's a good, strong rental market. So bear in mind that all the figures that we've covered here are very specific to Nottingham as a whole. But if you want specifics on, say, Beeston, Stapleford, a pocket of Nottingham, please reach out, give us a shout, tell us the area that you want, and we can give you all the data on that specific area. So to summarise it all, the rental market is extremely strong at the moment with good returns, good yields. Averaging around 6 to 8% gross yield is the average for most of the rental stock out there. Does depend on whether you're looking at sort of HMO or serviced accommodation, more specialist markets where the yields are higher. but the general rental market, you should be looking at between 6 and 8% yield. We're seeing a lot of increased interest at the moment with HMOs, so a lot of outside investment looking at Nottingham for HMO style investments. And the biggest new trend on the market is obviously serviced accommodation. And only really in the last couple of months, we've seen a huge amount of increase of inquiries of people buying or renting to SA. So if you hear us ever mention SA in any future videos, it's short for serviced accommodation. And we'll cover that a little bit later. If anybody's got any questions on that, we can sort of cover serviced accommodation in a bit more detail.
Just to sort of touch on the rental market a little bit more, what we have seen, probably a bit of a difference in the last probably couple of years really, is that the demand now is higher for better quality accommodation. So I think with a lot of the student providers coming into Nottingham, they're building purpose-built sort of student pods and things like that. They're doing it to a very high standard. They're including things like gyms and cinemas and, sort of lots of on-site sort of benefits and things to the tenants, that it's really sort of raised the game, I think, across the market. So a lot of landlords, have really sort of stepped up and improved their properties greatly. But tenants, they are happy to pay higher rents, but they're also looking for a better quality of accommodation. So just something to sort of keep in mind, if you are looking at either buying something to rent or you've got a property that you're thinking of rent, have a look at it. Does it need a fresh lick of paint? Does any furniture need upgrading? What's the kitchen like? What's the bathroom like? What can you do to sort of differentiate yourself against what else is out there in the market? Because it is, as David said, it's a very busy market at the minute, but competition is still very high. So you've got to just do something just to sort of step up and above that, really. So worth taking into account. And obviously, we're happy to offer any advice that we can if you've got any questions on that too.
Yeah. So what we'll briefly cover now is some areas or markets really to keep an eye on in 2019, both from a good perspective and a bad perspective. So it's got off to a very quick start this year, which we didn't really expect, especially with Brexit looming in March. January is typically a quieter, steady start to the year, but we found this year people are just out there looking to make decisions pretty quick. So some areas that we've identified are looking really, really good for 2019. The first one you probably won't expect, and that is the Meadows. The Meadows area of Nottingham, small pocket, basically between Nottingham train station and the south side regeneration, stretching down to the embankment, and then West Bridgford over the other side of the river. So that small pocket actually is a superb location because you've got the embankment there where a lot of events happen. You've got things like the marathon and they even run the festivals down there and all sorts of things on the embankment. And then just a stone's throw, 10-minute walk, you're at Nottingham train station and then you're into the city. So the south side regeneration area is starting to pick up now. You've got development going on there with 2 big purpose-built student developments, and there's more going through planning now. And since the tram has cut through the Meadows, you're now starting to see the council dropping a lot of the old council housing and building new, modern, even eco-friendly property. So it is a very small pocket, but it's an absolutely amazing location. And it's very sort of undervalued at the moment and underrated. So I would say if you're looking for something that may be the next hot area, the Meadows would be one to keep an eye on. Keep an eye on the standard of the property, the prices, and then obviously if you're looking at it from an investment perspective, what the rent and yield will be. But because you're nestled between West Bridgford and the city centre, which are 2 very good, strong markets, I don't think you can go wrong there. It's just going to come down to picking the right property for what you're looking for. So that's one to keep an eye on, the Meadows.
Another place to look at is, I think we sort of mentioned it briefly, but Beeston as an area. Obviously, we've seen a lot of change there in recent years, again, since the tram and everything went into Beeston. It's just it's really now connected it a lot more to Nottingham. Obviously, you've got a lot out there anyway. You've got the university over there. You've also got some of your big companies such as Boots. So it's such a great location, but it's also becoming even more popular with families. They're investing a lot back into the area. They're redoing the high streets over there. It's just becoming a really sort of cool, trendy, sort of suburb of Nottingham, really. And you're surrounded obviously by some very nice parks, Bulletin Park, things like that. So definitely one to keep an eye on in the future, I think, over there, yeah.
And the two things that we're going to move on to now are more the ones to just keep an eye on from a slowing, cooling perspective in the marketplace in Nottingham. And these have come on our radar at the end of 2018, but now in January, we're starting to see that things aren't changing and they're not getting any better in these areas. And one of which is actually one of the most popular places, which was West Bridgford. Now, that's had a really good run for at least the last 5 years, where it's been consistently increasing at a rate higher than the city centre and most other areas. And it became a very popular, cool suburb to be in. There was a lot of nice brands moving into Central Avenue, and it was becoming the area that the money was moving to. So it's had that trajectory for at least the last 5 years. Now, what we started to see at the end of 2018 was it starting to overheat. And now we're in a position where it's pretty much plateaued. So properties are still fetching the prices that they were, but it's taken a lot longer. And you're having to be super competitive, because anybody trying to sell property around there now, it's getting a lot more competitive, and there's a lot more choice out there. So I would say with West Bridgford is just be a little bit cautious with it, and make sure you look at the comparables and what's out there, especially if you're looking to sell. You know, it's almost keeping an eye on what your competition is doing around there. So yeah, West Bridgford, keep cautious, really.
Yeah, I mean, still, you know, a fantastic part of Nottingham. Some lovely areas, lovely property. Obviously, very, very close and commutable to the city. It's just obviously prices are starting to sort of level off a little bit more there now. So there's still, you know, still a fantastic place to live, great schools, things like that. But we just don't see that prices are going to keep going at the rate that they were increasing, which I think is, you know, it was crazy, really, with how quickly they were going up. So we're just sort of seeing that steady off a little bit more, especially with some of the, you know, the bigger family houses and things as well. Obviously, when the prices start getting up and over $500,000, you know, you are into a sort of tighter market. So again, it comes down to your marketing and things like that. What's your property got that's different? What can you really do to differentiate yourself and make yourself stand out with that? So again, just, you know, sort of things to keep in mind, really, if you are thinking of marketing your property in the near future over there.
Yeah, some advice that's tagged in really with these areas to be cautious of and to look forward to, really, is the biggest thing we're having to say to people at the moment is be very cautious of your pricing and constantly monitoring it. So you can't just put your property on the market now and not look at your pricing strategy for a month or two. You've literally got to be looking at it quite regularly now, because things are moving quite quick, but it's the pricing element that people aren't reacting to. So you can quite easily find yourself outpriced, and competition comes onto the market and you're sat there overpriced. We saw that become a major issue, which we'll cover a bit more, on the selective licensing. So when that came in, that caused a flood of property onto the market, and where properties were correctly priced 1 week, they were then having to adjust very, very quickly due to this oversupply. So it's just be a bit cautious at the moment, especially with things like Brexit, and the impact that might have is if people start putting more property onto the market, you do need to move quick on your pricing if you need to sell or move quickly. If you don't, then you can afford to spend a little bit more time, but it's just be realistic about it, keep monitoring it, and work with your agent to make sure that that's being checked more regularly than normal, I'd say.
Yeah, no, absolutely. Sorry, where are we?
So another thing really is just marketing. Because it's so competitive at the moment, is you really have to differentiate yourself. So more and more, especially what we're doing with things like staging, because of the oversupply that was generated from selective licensing, some areas of Nottingham have had to get very clever with the marketing, and you've got to try and make your property stand out. So again, the advice is to keep looking at your comparables, see what else is out there on the market, and just make sure that you're differentiating enough that you're actually really selling your plus points and the wow factors, that it's in the description, it's in the photographs, and you're maximising your chances, really.
Yeah, I think, you know, just another thing to add on that is looking at sort of reinvesting a bit back into your property as well. So we've got, a lot of properties in Nottingham. Obviously, there was a lot of development went on, looking more sort of city centre lace market, around sort of 15, 17 years ago. There's a lot of properties still sitting there, and they've still got original kitchens, they've still got original bathrooms, things like that. Is there a way that you can have a look at it? Can you update it? Even some new splashback tiles, some new decor with a kitchen. Can you update sort of doors and worktops and things like that? Is there something you can do? If there's 2 or 3 on in a development, can you make yours stand out against it by doing something like that? Or as David said, perhaps the option of sort of staging. So you come in, home stage, let's dress it up, let's really sort of try and sell the lifestyle of the property, and really sort of make it stand out. Another thing just to keep in mind as well is obviously how you're marketing the property. So whether it's with tenants in situ, are the tenants looking after the property? Is it presenting well for viewings and things? 99% of them are fantastic, but it might be a case of, they've rushed out to work and there's a viewing today and they've not made the bed and it's not been as tidied up and things like that. And it does, just perhaps have a bit of a knock-on effect on somebody coming round and seeing the property if it's not just that sort of finished article that they're walking into, really. So just a few things to sort of take on board and have a think about, really.
Yeah, so that kind of summarises the Nottingham market as it stands right now, and a few things to look for and just be cautious of. So what we'll move into now is a bit more of the Q&A session. So we have had a couple of subjects and questions that have come in advance. By all means, everybody that's on the platforms now, post your questions into the feed and we'll get onto those after these. So obviously there's 2 hot topics that we want to try and cover quickly here. And they've been questions that have been brought to us by numerous people over the last couple of weeks. The first is really what effect selective licensing has had on the market in Nottingham. It may, I don't know where you might be based or where you're thinking of investing or buying in Nottingham, but obviously selective licensing came in quite a large scale, and it was a city-wide scheme which covered a lot of outer areas of Nottingham as well. Because of the scale of the scheme, covering over 32,000 properties, it did have quite a major impact on the market very, very quickly. So it came in August, and as much as the council didn't think that the landlords would pass the cost of that on to tenants, it did very, very quickly. And what we saw was rents rising on average about £25 a month across the board. So particularly in the city centre, most apartments now are priced £25 extra a month from what they were sort of beginning of last year. Then what we've seen is basically house prices have increased. We saw a big influx really of people trying to offload. So a lot of landlords, it got to a point where when you factor in things like Section 24, and then the extra cost of licensing, a lot of landlords then thought, this is time for me to exit the market. So what we saw, as well as rents rising for those landlords that were staying in the market, we also saw some landlords pushing their properties to the sale market. That then caused obviously an oversupply, which has then brought the prices slightly down and sort of plateauing. So we're still at that level now where prices have pretty much stabilised, and we're not seeing any increase like we were before.
I think partially what we're also seeing as well is, buyers are aware of this. It is sort of swaying more towards a buyer's market when there's obviously an oversupply. So if buyers are seeing 4 or 5 in one development, they will go in, they will perhaps make an offer on 2 or 3 of them if they're fairly similar. And, they are being quite cheeky with the offer. They're coming in sort of 10 to 15% below in some cases. So they are, trying to bag a bargain, which I think, if we were all in the same situation, I'm sure we'd all try and do the same. But they're really, sort of pushing this. So again, it's sort of just, sorry to keep harping on about it, but it basically comes back to how you can sort of differentiate your property. Obviously, when the licensing came in and a lot of landlords just shoved their property straight on the market, it was with tenants in place. The properties aren't presenting as well as perhaps they could do. You're selling it with tenants still in contract, where it may be a property that's more suitable for a first-time buyer. So it's just sort of drilling down and looking at your market and saying, right, who's this property more suitable for? What's the yield on it? Is it a suitable investment for a buy-to-let landlord or somebody looking at serviced accommodation? Or is it more of a sort of first-time buyer home where it's going to be perhaps a sort of couple that have been renting, that now want to sort of buy their first home? but they will want a different sort of standard of property. Obviously, they're looking at it for different things. So investors can look more at the sort of yield and the figures, and it's less emotional for them. Whereas first-time buyers or even second-time buyers, they're looking at something that's going to be a home, so they want to see it's in good decorative order, it's got nice kitchens, it's got nice bathrooms, it's been well cared for, because they don't want to see something that's moving into a property and then thinking, right, well, what's going to go wrong? Is this going to break? Is there going to be issues with that? And it is questions we're sort of being asked on a daily basis. So just very much think about your market, if you're sort of looking to market your property within the next few months, really.
Yeah, and it doesn't seem to be deterring buyers, because obviously it's a bit of a buyer's market. They've got a lot of choice, and prices have kind of stabilised so that they can shop around a bit more now. They don't need to move so quick because prices were increasing quite rapidly before. So that's one aspect of it. And then also we're seeing landlords still investing in the market, because they're now structuring themselves to be able to cope with Section 24 and cope with the licensing. They're factoring that into their structure, and many are buying through things like limited company structures and stuff like that. So even though there are landlords exiting the market, there's equally the same amount coming back into the market with a different strategy and a different setup. So that pretty much covers selective licensing and the impact that's had. It has been quite dramatic, and it has kind of capped off 2018, where we're not now seeing prices creeping up any further. I don't think rents are going to increase much more now, because we pretty much are at the ceiling of what tenants can afford to pay. So we're at that level now, and the same on the sales market is I don't think there's much room for increase whilst we've got Brexit looming. So that brings us nicely onto the second hot topic, and one that's actually being debated as we speak now. So I don't know the result of the vote that's happening right now, but we are seeing an impact in the marketplace here, that there's a lot of caution with it and uncertainty, as there is with everything else, as to where it's going to head. So one thing that we're kind of discussing with a lot of people that are trying to negotiate the market and think about this is it really does just depend upon your personal strategy and your personal circumstances. So if you're looking short term at doing something very quick, so whether it's, say you were looking at a property to do a flip, you were looking to buy it cheap, flip it on and make some money, or you're looking at a development project that would be within the next 6 to 12 months, then I would say be cautious with those short-term strategies, because there are so many uncertainties linked to Brexit, whether that's the increase in finance costs and interest rates potentially going up, the increase of build costs and construction, and there's also the uncertainty about what your exit strategy prices might be, because we don't really know where house prices could go from this. It could go down, and it could go down considerably, but equally, if it's a good deal and we manage to do something good with Brexit, we could see them carry on in the way they are. So with that amount of risk, any short-term strategies, I would just err on the side of caution and maybe just hold out until at least we know what's happening in the next couple of weeks after the vote today. So that's short-term. Long-term?
So I think, it's sort of David touching this, it's all a bit of an unknown, really. So nobody knows quite which way it's going to go. As we've said, already, we have seen a number of sort of buyers still out there. There's lots of people looking to purchase property at the moment. If you're looking at something long-term, whether that be a long-term investment, you're thinking of sort of the next 10 years, you're just looking to perhaps put it in as a pension type thing. So you're thinking of obviously buying a property, eventually seeing obviously some capital growth in there, but also be able to pull some money out of it rental wise over the next 10 years, then that's fantastic. We don't see that sort of changing too much. Likewise, if you're looking at perhaps buying your first home and it is going to be your home for the next sort of 5 or 10 years, or perhaps it's it's more your forever home. If you look at the market over the past sort of 20 years, for example, there's been ups, there's been downs, it's been sort of all over the place a little bit, but it has, it's kept going up. So I think you will sort of see that. Plus, it's obviously looking at something, if it's, you're looking at buying your forever home, you're looking at it as more of a personal thing. Is it something that you want? Is that where you want to live? Is that where you want to be based? Is that the type of home that you've always sort of dreamed of? it boils down to a lot of different things. So I think long term, we don't see that it's going to sort of change too much. You know, prices I think will sort of keep going up and up. It might just be more gradual than steep increases, really.
So to summarise, whether you're thinking short term or long term, the one thing I'd say, because of the extra risk elements involved in this and the level of uncertainty, is just really hone in on what your personal circumstances are and make sure you take professional financial advice. So speak to a financial advisor, a mortgage broker, and just take your time to work out all the different variables and your potential exit strategy. Particularly if you are still going to go ahead in the short term with anything, is just make sure you've financially planned out all the variables so you have an exit strategy. Long term, I don't think you need to worry so much because you're not thinking of an exit strategy right now. So yeah, we'll wait and see what the vote comes out with today. There is obviously uncertainty about that and what that could initially see straight away with currency. There is expected that the pound might drop after the vote. So we'll see how that pans out. But yeah, just make sure you seek the right financial advice before you go ahead with anything right now in the short term. So what we'll jump onto now is the questions. Those are the subjects that we've had brought to us over the last couple of weeks, but we've also had a couple of questions through the social media platforms here that we're on. And we actually had two quite interesting questions come in from a tenant who responded through Facebook, and it was actually Steve Bowman on Facebook. And he asked two great questions actually that people don't so much understand or come across. One of which, the first of which was, why do agents charge so much for credit checks and referencing and then keep the money if there is a problem? So what I thought I'd do with this is clarify the variables within that and then what the future is of that anyway. So firstly, they shouldn't be charging huge amounts of money up front. It does vary because agencies can charge what they like for your initial application, your referencing. There are obviously costs involved with that they need to cover. So they have to cover the credit checks, the referencing, and then the administration of your application, whether that's paperwork or negotiating with your landlord and all that sort of stuff. So there is a genuine cost that they need to cover. But at the same time, any agency should be charging a reasonable price to cover that. The bit about it not being given back to you if there is a problem, the biggest advice I can give to any tenants is make sure you read the terms and conditions that you're given and that you have to sign when you make that initial application. Because if they are able to keep it to cover the costs, it will be highlighted in there and it will be transparent that if for any reason you fail the referencing, then most of the time that application fee is kept to cover the costs. There will be other terms and conditions in there, like depending on if the landlord pulls out, you should get the money back. But it does vary depending on who you're dealing with as an agency. So the biggest advice to any tenants on that particular subject is read the terms and conditions before you transact any money. The good thing as well that this question's highlighted is obviously to make you all aware of the tenant fee ban that's coming in. It was scheduled for April, but I now believe it's June as of today, that it's hopefully coming in. And what that will do is effectively ban tenant fees at the beginning application process. It will be good because obviously they do fluctuate across the market and it is an expensive process for tenants to take a property. So by banning them outright at the beginning, it'll standardise everything and obviously make it much more affordable for tenants to move. So just bear that in mind that in the meantime, until June, make sure you read everything in your terms and conditions. But in June, keep an eye on what the government guidance is on the tenant fee ban. And as soon as that comes in, things should be much easier, much more transparent and clear for you.
So the second question that we've had from Steve is, why are pet owners penalised? Not all pet owners live like tramps. An excellent point, to be honest with you. You know, there's so many fantastic pet owners out there. You know, people have pets when they're moving home. Not everybody's in a position where they're buying or they want to buy, and a lot of people obviously do want to rent, and you know, obviously they want to bring the pets and things with them. So it depends on agencies, on landlords, on sort of personal preferences and things like that. Normally, in our experience, a landlord may take a higher deposit if somebody's got a pet, so they'll perhaps take it, or they'll perhaps put a clause in the contract to say, you know, we'll have the carpets, for example, professionally cleaned before you move in. We'd just like you to professionally clean them and provide a receipt when you move out, just to ensure if somebody's had dogs or cats or something like that, that the property is being handed back in the same condition. This shouldn't cost a huge amount. As I say, it depends on the landlord, on the company, on what they're sort of doing. So worth, again, just sort of reading any terms and things in the contract, and perhaps offering this at the early stages. You know, if you do have a pet and you're looking to rent a property, perhaps offer to get a professional clean, offer to get carpets clean, perhaps pay a slightly higher deposit that you'll then get refunded to you at the end of the tenancy, subject to the property being handed back in the same great condition that you hopefully get it in as well. So yeah, it's not something we see that people should be penalised on. Obviously, sometimes there are restrictions. So if it's an apartment block, for example, there may be a restriction in the lease that does say there's no pets or anything. But more traditionally, houses, bungalows, things like that will be more open to accepting pets rather than sort of apartment blocks and things.
Yeah. So to sort of summarise, pet owners shouldn't be and aren't really penalised. What typically happens, you shouldn't be paying any more rent, that's for sure. So generally the rents are standardised, that everybody pays it no matter what. But what they'll typically do is ask for an increased deposit, because there is the risk that your pet could cause damage and it's not really your fault. So they'll typically take an increased deposit to cover that eventuality and that risk. But again, if you look after the property, if you make any repairs and you make sure it's all clean and handed over and you manage your pet, then the deposit comes back at the end. So it actually doesn't cost you anything unless that incident happens. The thing to also bear in mind is that quite often terms are put into the contract regarding pets. So a lot of ASTs may carry the term that you must get it professionally carpet cleaned to get rid of any infestation, just on the off chance that fleas are in the property but maybe lying dormant. So bear that in mind, make sure you check the contract, that if that's in there, the best thing to do is have it all done before you leave the property yourself, show an invoice or a certificate to say you've had it done, and then that kind of covers you from any further expense. So yeah, it's just managing it, I think, the way you would your own home with your pet, and just appreciate that it is somebody else's home and that somebody else is going to move in after you. So it shouldn't cost you any more and you shouldn't be penalised. So just make sure you follow those guidelines and check your contract, and be prepared to pay a slightly more higher deposit, but you'll get it back after.
Another option on that could be, again, depending on the landlord or the agent themselves, but could be to take out a specific insurance policy. If you're taking out contents insurance, make sure it covers against any sort of pet damage, anything like that. You'll probably pay less, I would think, in an insurance policy, subject to premiums and things like that. Again, obviously seek relevant advice on this, but it will cover obviously against much higher prospective damages or cleaning or anything like that than perhaps just what a deposit will, and may make the landlord or somebody feel a bit safer. So you may not have to obviously shell out as much in the first instance. So again, just perhaps an option just to sort of keep in mind and maybe look into it a bit further.
Great. So have we got any questions from Facebook, YouTube, anything that you want answering? Anything about the wider market, Nottingham market? It can be sales, rentals, anything that's sort of cropping up. We'll give it a couple of minutes just to see if people have got any questions. Hi, Rachel. Thanks for joining us. Let's have a look. Any questions at all? Obviously, what we'll do anyway is we'll post these videos onto the relevant pages after. If you do have any questions later down the line, just comment on the video and then we can come back to you in the comments on that. So yeah, if everybody is good and no more questions, then what we'll do is just wrap up this for the first time. Obviously, it's been a learning curve for us to do a live Q&A and to do all the technology with multiple cameras and microphones and everything. Please give us your feedback. We're cautious about sound quality as well, so we'll try and get mics and things for future ones. Now, we're almost planning to do these every quarter or every month if people want them. And it's really about us giving as much information, value, everything that we know, all our expertise to you guys out there that are negotiating the market right now. So yeah, feel free to sort of catch up with us, message us, let us know your feedback and your comments and things that you want covering in future episodes. And we can do that for you in the next live feed.
Yeah, so just want to say, yeah, sort of massive thank you from us just for tuning in and listening to us. Hopefully there's been some useful tips and things in there. If you need obviously any more clarification on anything, if you want to have a chat about anything more, then please feel free to comment or just approach us directly. And we love to help where we can. And I hope everybody has a great evening.
Yeah, thanks again for joining us, and we'll see you all next time. Cool.